Over the last week, we have broken down the impact of tariffs, from rising stagflation risks to the outlook for the dollar. And we touched briefly on the Fed's independence after Trump's sharp comments about Jerome Powell, calling him, quote, Mr. Slow. I'm Johanna Bota, and with us to continue the conversation is StoneX's Director of Global Macro Strategy, Vincent Deluard. Vincent, thank you for being with us today.
Pleasure to be here.
So even though Trump said last week that he had no intention of sacking Powell, we want to come back on the legitimacy of the Fed being at risk. So will the Fed be a scapegoat for economic downturn?
Absolutely. I mean, scapegoat is the key word here. I'm not sure that Trump is looking to fire Powell as much as he's looking for someone to take the blame for any possible slowdown in the economy in the coming quarters. We certainly saw that from other Republican lawmakers and cabinet members. With Trump, it's never Trump's fault, right? So if something goes wrong, there needs to be someone else, and there is a bit of a legitimacy to his claim. I mean, not on firing the independent central banker, but if you look at the first term, they had a similar spat. At the time, Powell's hiking, thought that tariffs would be inflationary, and Trump saying, no, the economy's fine, tariffs won't be inflationary. And at the end of the day, yeah, Trump was right. The Fed had to do this dovish pivot in December of 2018, Christmas. And 2019 turned out to be a much better year with a more dovish Fed, more accommodative policy. Now, I think circumstances are greatly different this time. And it's probable that Powell is more correct than Trump is. But again, it's not so much about the reality than it's about appearances. And it's really about finding who to blame if things go wrong.
So the ECB recently actually lowered the rates. And obviously Trump is sort of wanting for the Fed to do so as well. If the difference in the rates just keeps getting bigger and bigger and bigger, what does it mean for the global economy to have these differentials?
Well, it's positive for the dollar. If the dollar rates are much higher than the rest of the world, at some point they would act as a magnet for global capital. I mean, the big problem we had since the beginning of the trade wars is foreign investors voting with their feet. They don't like what they hear from the White House. They don't like when, obviously, the president threatens to sack the central banker, throw tariffs in what seems to be a little bit of an erratic fashion. So we've seen foreign capital, a lot of that European, a lot of that Japanese as well, move out of the U.S., which has brought the dollar down and had created something that seemed unthinkable just a couple of years back, which is a risk premium on U.S. assets.
Yep.
It used to be treasuries were the safest, most liquid, world reserve currency, and now we are seeing the U.S. trade a little bit like an emerging market, and emerging markets have to pay a bit more to convince foreigners to park their money there. So on the margin, if we see the ECB cutting, which I'm sure they will in June, while the Fed stays put, that's somewhat dollar bullish, and that's, I would argue, pretty good for the global economy.
Now, earlier this morning, the Bank of France's Governor François Villeroy de Gallo said that the ECB actually had more room to cut rates. And he added that slower economic growth in the U.S. is actually, well, a good opportunity for Europe to become an anchor of stability, as he says, for the global economy. So what's your take on the latest ECB comments?
Well, so first of all, congratulations on getting that name right.
Thank
it's not
you.
An easy
I
one.
practiced.
And as you could tell from your fantastic pronunciation, François Villeroy de Gallo is French, and I think that matters.
Yes.
He's a very highly respected central banker, probably the second most senior figure after the Bundesbank. And I mean, Lagarde is also French, but intellectually she probably bows down to Villeroy de Gallo. And the French are always in the low rate camp because France has this big deficit problem, a lot of debt to roll over. And one thing that was very problematic was, what rate are we going to roll over all this debt, especially as the ECB's balance sheet is no longer growing. So in a way, having this trade war, this sharp appreciation of the euro, and this room for additional rate cuts is a blessing for France. I suspect the French are actually quite very secretly happy about the trade wars
Okay.
because it solves their biggest problem, which is having to roll over, debt of 100% of GDP at a time when the ECB is not buying, and there are very few willing buyers of French debt. So it's like almost with a magic wand. Donald Trump has fixed the biggest problem for the French economy and allowed basically to postpone reform, which is what we love to do in France. We love to rely on monetary drugs instead of doing the hard work. So um, that's the context. In terms of the comment, I mean, yeah, from a macroeconomic perspective, Deluard is probably right. I mean, the euro has
Okay.
appreciated by more than 10% against the dollar. If you look at energy prices in euro, it's fantastic, right? You get lower prices, stronger euro. Nat gas, which is kind of key import for European industries, is down 39% on the year. Brent is down something like 20. So yeah, there's room. I mean, the inflation is almost on target, 2.2%. So yeah, it's all clear. I think again that the ECB wanted to do that anyway. So um, yeah, more cuts in Europe than in the US, and in the short term, that's very positive for the European economy.
I was going to say, essentially, this would be just much, much better for the European economy. Thank you so much, Vincent. And thank you for watching. For more financial content, please remember to like and subscribe to our channel. See you later.